And many argue that you got to watch the dollar right now to know where stocks, bonds, and maybe the entire economy could be headed. Marc Chandler writes about this as well as anybody out there. He is chief market strategist at Bannockburn Capital Markets, and he joins us now. Marc, I am not a currency expert by any means. I leave that to smart people like you. I have learned a lot from your notes recently. And this move, though, in the dollar has been pretty dramatic. What does it tell you? And put it in some kind of historical context for the non-currency experts out there.
Sure, yeah, thanks. So the dollar has really been rallying more or less since the end of the great financial crisis in 08-09. And the dollar index that Rick had shown earlier peaked in 2022. But we've been going broadly sideways. And I think that what's happened is the dollar is breaking down. It's not just because of the tariffs, though that's capturing our imaginations. But there's been a real reversal of U.S. positions on many different foreign economic policies lately. I think about the WTO, U.S. is going to be paying the dues. I'm worried about next week at the IMF World Bank meetings where the U.S. may very well announce cuts in some funding of different programs. And so I think that the dollar's decline long overdue. And the way we think about it being overdue is that the dollar is very expensive on a purchasing power parity terms. It's like watching two fighters, and they say the smaller fighter is stronger than the larger fighter, pound for pound. That's a similar measure we use in the foreign exchange market. Instead of pound for pound, purchasing power parity. And by that measure, the euro and the yen are still almost 50% undervalued. So I think what's happening now, sparked by the change in administration, is the rubber band is snapping back.
That would seem to play a role in what companies actually pay vis-a-vis tariffs also, would it not?
Yes, I mean, of course, you know, the thing is that a lot of the things that the U.S. imports are already denominated in U.S. dollars. Same thing with much of what we export. So the dollar's impact on that might be relatively modest. But I think that when we're in the middle of earnings season, and many companies will attribute some of the weaknesses to the strength of the dollar. So the weaker dollar will help U.S. exporters and help U.S. multinationals' earnings. But we're not going to really see that yet in the data. We probably have to wait another quarter or two.
Are you watching the dollar index, Mark, or are you watching the dollar versus the euro, the dollar versus the Chinese yuan, or D, all the above, I guess?
Yeah, I think that, you know, it matters where you are, where you sit. For many of our clients at Bannockburn, they're corporations, and they don't have dollar index exposure. They have euro exposure or Mexican peso exposure. But I think for many of your viewers, just to get a quick handle on what the dollar is doing, the dollar index is useful. And because it's an index, it tends to trend better, which means that some of the tools that people use in the market, like moving averages, tend to work a little bit better with the dollar index than it does with individual currencies.